What's up, everyone? All right, in today's episode, I'm going to give you my watch list for Monday morning and the game plan for the week ahead. Monday will be day 6 of my brand new small account challenge. Last week, days 1 through 5, the account went from $2,000 to over 25 grand. So I'm now above the PDT level, which is by itself amazing. Now, speaking of PDT level, I don't know if you saw it, but yesterday I uploaded a episode, which was a podcast that I was featured on last week, and it talked about this big announcement that FINRA, the U.S. regulator of the financial markets, has approved an amendment to the pattern day trader rule for the first time in nearly 25 years. So I'll put a link to that episode at the end of today's watch list so you guys can check that out. And I also uploaded on Friday the Friday recap, which was the day 5 recap of how I turned 2,000 into 25 grand. So just really right now, I'm so excited. The whole goal of this small account challenge is to raise money for charity. And I'm doing it by growing the account, but I'm also doing it when you guys are hitting the thumbs up on all of those episodes in the small account challenge playlist. So make sure you go back, watch them, and hit the thumbs up if you haven't already. Now let's go ahead and look at the charts here. So on Friday, guess what? We had a stock that squeezed up well over 100% in the after-hours trading session. What was the catalyst? Say it with me. Private placement. This has been such a strong catalyst. And you know what's really interesting about this is this private placement had nothing to do with cryptocurrency. So this stock went from about $6 a share to nearly $20. Amazing. 6 to 12, up 100%, pulls back, then goes up to 14 to 16, pulls back, goes up to 18, breaks, and goes up to just under $20 a share. So JFB Construction Holding Company, I mean, this is not the typical hot sector, but let's think about the stock in terms of some of the other 5 pillars of stock selection. Price, between 2 and 20, check. Float, 900,000 shares, check. Volume, it was certainly high relatively to what's normal. It was the highest volume day it's ever had on Friday, just in after hours trading, 10 million shares. Now, 10 million shares is not a huge amount of volume, but it's very high relative volume for this stock. In fact, the relative volume ratio was 325, which is really powerful. It was up more than 10%, had a news catalyst. So everything checked out for this stock. The only thing I thought was a little interesting was, I mean, look, a $44 million private placement is a big deal. So they intend to use $12 million of the net proceeds from the offering to retire some Class B stock. Okay. And then they're going to use the remainder proceeds for general corporate operating expenses. So nowhere in here, and the price of the warrants for the common warrants A issued at $5.75. And then they had common warrants B issued and exercisable immediately at a price of $6.25, and then they expire in 3 years. So what I find just interesting is that, you know, private placements in general are well received by the market. And this is the reason why. So when a company does an offering, when they raise more money, they have a couple different mechanisms that they can use. One, and this is what's really commonly done, is that if the stock has high volume, they use an underwriter to sell shares directly on the market. So how does that work? Well, what the company has already done is filed a shelf registration and filed it with the SEC. So it's filed and all shareholders are on notice. And the filing tells all shareholders that the company intends to sell more shares on the market. Sometimes they'll do a shelf registration to sell 100 million shares, and it's at a to be determined price. So then they work with an underwriter. The underwriter gets those shares essentially through the corporate action. So the shares have been issued. The underwriter is now holding them. And when they're ready, the underwriter, all they have to do is press the sell button. And every time they sell 100,000 shares on the market, boom, they're raising that money for the company. Now, the underwriter gets their cut, of course. And so what ends up happening on a day when a company is doing a secondary offering and it's right on the open market is that underwriter all day long, that investment bank is just pressing the sell button. And we saw this with GameStop, where they would sell, it was like 15 million shares. And all day long, you would just see these big flushes where it was just like a market order. And that's essentially what it was, just a big market order. And then all of a sudden, when the company was done selling, that selling pressure disappeared. And all of a sudden, the stock rallies up because there's nothing holding it back from going higher because it's not having a 100,000 share market order dumped every time the stock pops up. So when a company does a secondary offering and sells right in the open market, you see an immediate impact in those moments of the price dropping. Now, sometimes the stock continues going higher because traders don't know in real time that the company is selling. We'll know later, but we don't always know in real time. So the price may continue to go higher, and then later you get the news that they've completed a secondary offering and they've raised $5 million and sold an average of, X amount. Now, the other way a company can raise money is by going into an agreement with a private investor or an institution. And what they do there is they issue the shares directly to that institution, and then the institution gives them the money. Now, usually the institution says, look, I want a discount because I'm taking the risk of giving you guys 10 million bucks. So a lot of times when you have that type of offering, we'll find out that shares have been issued at, could be like 50% lower than the current trading price, which can be a problem. Now, in the case of a private placement is very similar, except that in this particular case, it's a large private placement of $44 million. And so now you're thinking, okay, there's an institution out there that felt comfortable enough writing this company a check for $44 million. That's a significant amount of money. And it's not, it's like there could be scenarios where they're getting the shares for so cheap that, like they're going to give $44 million, but they're going to get, 100 million shares or something like that. But if that was the case, then the float goes up to 100 million shares. And generally what happens is these stocks will just sell off because everyone knows that these insiders can sell shares even at, $1 a share, and they're still making money. So, but in this case, we can see that the price of the offering is a little bit higher. So, they've raised money, but the value of the shares is higher. And so in this scenario, that's bullish because number one, we're not going to see on day zero, basically the moment the news comes out, or call it day one, whatever you want, you're not going to see that instant selling pressure typically. Now, when a private placement occurs on a Chinese company or something like that, you don't really know for sure. But when it's a US company, you can feel pretty confident you're not going to see that selling pressure on day one. And now you know that they're not going to need to do a secondary offering, the type where they're dumping the shares on the open market, because now they have cash on the balance sheet. So that's kind of one of the biggest fears with trading small caps is that we're taking a trade and all of a sudden the company starts selling. And we even had that stock on Friday. I'm trying to remember the ticker now. It was BIAF that kept having that resistance up around 7. And on this one, I was saying to myself, I'm speculating because I don't know for sure, but I wonder if the company was selling shares at around $7. Because every time it came up to 7, market order flushed back down. And remember, I explained this in my recap on Friday, this was not short sellers. How do I know that? How do I know it wasn't short sellers that were causing these big flushes? Because the stock was on short sale restriction. You cannot hit the bid with a market order when a stock is on short sale restriction. So those were genuine sellers of people that owned the shares. Now the stock has a very low float. So there weren't really enough shares even in the float of people holding to create that many flushes. So then where were the new shares coming from? So that's what I speculate. Again, I could be wrong, but that's just what that price action was telling me. So when I see this price action, I'm trying to read into it and understand what's going on behind the scenes. Now, if we had finally been able to break through that level, that seller was finally done selling. They wanted to sell 500,000 shares. They were sold. And then it comes back up, surges through that level and pushes higher, goes up to, $8, $10, $12, $14, $16 a share. That's awesome. And then maybe a day later, we find out that the company has sold, 500,000 shares, an average price of $7, and they raised $3.5 million on that secondary offering. And we would say, oh, it was priced at $7. Yup, that makes sense. So, these are the things that I'm thinking about. Nonetheless, on Friday, I was really impressed that JFB made such a big move on this private placement, mostly because the private placement catalysts that have been working the best have been on stocks where the money is going to be used for a crypto treasury strategy. And that was not the case for this. This is just a $44 million private placement to be used for growth of the company. And the combination of that big private placement with a super low float, I mean, it sent it, obviously. Now, when you think about this company and its current market value, its current market cap, let's round up to 1 million shares. At $6 a share, it's a $6 million market cap. That's it, $6 million, right? I mean, that's just the simple math. So all of a sudden, they just got $44 million, on their balance sheet. Now, without looking at their balance sheet, that doesn't mean that the value should go from 6 million to 44 million. I mean, they might have debt, and that's part of why it's only 6 million, So that's not going to send the stock up, necessarily, 10x or whatever. But I think it's just sort of the combination of the low flow, supply and demand imbalance, and the market that we're in where these private placements have been well received. So going into Monday, am I going to trade JFB? Probably not. And I say that just because I missed the big move. So it already had the big move. It's now pulled back. It's gone sideways. Monday morning, if at 4 a.m. it rallies back up, and then between 4 and 7, it's consolidating, and then at 7, we have a trade here for like a flat top breakout. Yeah, maybe I would trade that. The only problem is for the small account up here, it's already getting a little expensive, right? So for the small account challenge, I've got to kind of focus on, stocks that are within what I can afford. So this was the recap as of Friday. We were at $65,000 in fundraising. Now, I haven't updated this since Friday, so it's going to be higher now because of all of you guys who hit the thumbs up on Friday's episode. But my account balance at the end of day 5 was $25,229.96. That did not include the commissions from Friday. So commissions will clear overnight, and so Monday morning when I log in, this will be a little bit lower. But this is basically where I'm sitting, $25,000 in the account, more or less, times 6. I'm going to have around $150,000 of buying power. So although I have the buying power, and you could argue I could start considering trading, some stocks that are a little more expensive, most likely I'm still going to do better trading in the $5 to $10 price range. And this is where we saw, just looking at those metrics from Friday, price and volume. These are the metrics from the entire small account challenge thus far. The bulk of the profit is coming on stocks between 5 and 10. And that's where I'm taking most of the trades. So that's going to continue to be my sweet spot. So JFB, maybe, but, probably not. STKH, another one that popped up, again, a very low float. This is a theme, these lower float stocks, recent reverse split, room to the 200 on the daily. These can work really well. Now, on this one, let's just check the news catalyst. So we actually didn't have fresh news on this, which is really interesting. So no fresh news. Well, it's one of those things, you kind of scratch your head at how it was able to go up, but I suppose at the end of the day, it wasn't up a crazy amount, but 34%, but still kind of interesting there, but no fresh catalyst. SOS up only 24%. It's not a lot. PAVS, these are smaller gaps. Now, do we have anything? But this is generally the first place I look is my after hours top gainer scanner for possible contenders. So now that we've sort of eliminated that, were there any stocks from last week that we should be looking at for possible continuation trades on Monday? TNFA did a ticker change, so they're no longer TNFA. I can't remember the ticker they changed to, but I don't usually love it when these companies do ticker changes. I mean, it did end up being a catalyst, but nonetheless. FLD, this is another stock that did give us a big move, but it didn't end up holding very well. So you can see it rallied and it double topped up at 7. Interestingly, same as BAIF or whatever that was, but then sold off. So that one's no good. BAIF, if it does break through 7, but unfortunately the daily chart showing a red candle. So that one's probably not going to work next week. SHFS, this one still kind of holding up. So this one, if you got a catalyst and we could get through 9, that's something we could work with. So here we got that big move, right? Then it pulled back and now it's sort of based out. So could this be where, the tide is beginning to shift? Maybe, but what would really send it all the way back up to 12 or 13, or higher? You would kind of need fresh news. So I don't, short of fresh news, I'm not sure it's going to work. AGRI, this is another one of those ones that made a huge move and then it unwinds, the whole thing pretty much gives it back. So that's not good for staying power. MRM, another one pops up, pulls back. So you could see, a lot of these stocks are making big moves and there's a lot of enthusiasm. People are really excited to trade them, but how many of them are holding up really well? And some would argue, well, geez, you get these big moves, trade them going up and then short them coming back down. And, that's not the worst idea, except for the inherent risk with shorting these that, what if you get one that just keeps going higher and never really pulls back? BMNR, you could argue this one pulled back, but it's still holding at $50 a share. So depending on how early you start shorting it. My approach for the small account is that I want to grow the account, donate the profit to charity, and I don't want to risk a big blow up because I short a low float stock. The low float stocks can make really big moves. We know that. And so I'm not going to try to, guess a reversal and time a reversal. I'm going to trade the front side of the move going up, and then I'm going to be done, once they get to whatever, they start to pull back a little bit off the top. And then I'll wait for the next one. So I'm focusing on trading the front side of these moves. On stocks to meet all 5 pillars of stock selection. And I would really say that Monday morning, my focus will be looking at this top gainer scanner to see what is leading the way. We don't really have, other than SHFS, a lot of good continuation candidates. We have it's just kind of a funny market right now. So I think no doubt what I would love to see would be more private placement headlines, but I'm going to pay attention to the float, because if you get a private placement on a stock that already has a 40 or 50 million share float, probably not going to be as well received. So it's kind of got to be that perfect setup in terms of the right stock that meets all 5 pillars of stock selection, that then on top of that gets that headline. It's just because if it doesn't quite line up, we're probably not going to get a big move. So I'm going to continue to be picky. In fact, last week in the small account, I only took 20 trades. 20 trades, 18 winners, 2 losers. Accuracy is 90%. Average winners are 1,300. The 2 losers were both really small, basically less than 10-second long trades. I just bailed on them like instantly. So that was good. My guess is I won't be able to sustain losers being that small. I'm sure this week I'll have a loser that's a little bit bigger. So that's going to happen. It's fine. But as long as the winners generally are still pretty high, then, let's see what I can do this week. So week 1, $2,000, 25 grand. Week 2, 25 grand too. Well, we'll see. Really the only question is whether or not we get good headlines. So that's something that I'll say in this kind of market where, I'm obviously a news trader focusing on these catalysts, so very dependent on breaking news. So if we have a day where we don't have any good headlines, it could be a no trade day. And then the next day we get good news and the account could go up. I could double the account in one day. So that's kind of the interesting thing, is that we are very dependent on the news cycle. So breaking news coming out pre-market. Now, in a hot market, we generally do see, there's enough stocks out there that we generally will see headlines every single day on a stock that does meet all 5 pillars. But the headlines, some of them could be really, really good. And then we get that, 800,000% move or whatever. Or we get headlines that are a little bit more mediocre, kind of a little fluff, and the stock goes up maybe 50%, 75%, or 100%. So being able in real time to kind of gauge, is this the type of headline that's going to send the stock up, 400% or higher, and I should like go all in on it, or is this the type of stock that it's going to be a small base hit, get in, get out, don't overstay your welcome? That's what I'm going to be having to make those decisions in real time. So for those of you guys that haven't already joined us for a 2-week trial, I really encourage you to check it out. Right now, being in the middle of a small account challenge, this is such an interesting time to be part of the community. This is the first small account challenge I've done using leverage in a few years. So this is a pretty special thing that's happening right now. So I'll put the link in the description of this episode, and I'll pin it to the top comment where you guys can join the 2-week trial. Looking forward to seeing you. I'll be streaming bright and early tomorrow morning, 7 a.m. Eastern Standard Time. All right, so I'll see you then. And let me remind you, as always, trading is risky. My results aren't typical, so please manage your risk, take it slow, and always practice in a simulator before putting real money on the line. All right, I'll see you guys first thing tomorrow morning.